Hey there guys, and welcome back to Alex Invest, and today the markets are green as we can see, and it is nice. Yesterday we had a bit of a mixed day, but that was all right too. Small caps doing well again as well, which is nice. Now you guys can see I don't have my screen there, and that is because my girlfriend needed it, and of course we all know we cannot say no to that. Anyways, today I want to go over CMC because yesterday and today it has been down, and it really surprises me because of where I actually see this company going. And so that's kind of what I'm going to share with you guys today. I usually don't share my price targets. I usually don't share my DCFs, etc. But you know what? I thought, why not start, just keep in mind these are my projections, and they can really vary between anyone who does them. So just do keep that in mind. But let's get into it. So I want to share with you guys a DCF and then my projections for 2025 as well. So we'll start here with the DCF. Now, first, I just want to share with you guys what I've actually done here, right? We've got the share value here at $1 a share. I know it's below that right now, but we're just going to leave it at $1. And we've got about 300 million shares outstanding. So for 2020, which is this year, right, I have about 500,000 there. And that's just because of some of these JV fees that our UEI, for example, is paying, etc. So that's kind of the 2020. And now 2021, we have 1.5 million. Now, again, that is kind of JV fees as well as some management fees there as well. So that's kind of where I got the 1.5 million. Now, 2022, we jump up to $26 million. Now, this is because of that 7% management fee that Cielo gets from these factories being built, right? So I basically took 50 million per factory, multiplied that by 8 factories, and multiplied that by 7%, right? We got 26 million around. Now in 2023, this is where it gets interesting, right? Because we have revenues from 4 facilities. This is what I put up here, right? Because I'm assuming that in 2023, we're going to see at least 4 facilities built. Now, that's 70% to the JV partner, which in this case, in pretty much every case here, is our UEI, and then 30% revenues to Cielo. So again, I took 30% of the 55 million, which that's kind of their projections for how much each facility is going to make. And that is on sort of 1,000 liters per hour, I believe, of kind of diesel produced. So it's low because that's kind of where they're starting now already, right? And they could go up to 4 or even up to 12,000 liters per hour produced here of diesel, of fuel in general. So low estimate here, right? Again, low estimate, but I'm taking what they currently have and what they currently say. So 55 million, right? Multiply that by 0.3, right? Because 30% goes to Cielo, and multiply that by 4, and we get 65 million there. And now, the way I did this is I just took the percents here and did it by percent, right? And then that automatically gives me kind of the value, because that's what you kind of want to do on a DCF usually. But anyways, so that's kind of 2023, right? Now, 2024, again, we basically 1.7 times our revenue from 2023 here. And that's because, again, we have another 4 new facilities. And then the revenues of, because... So $50 million is the cost, right, of each facility. So what I did here is I took 55 million, divided that by 2, because now the facilities have been paid off from this prior year of these 4 facilities, right? So now we have 4 facilities that we get 50-50 on, and another 4 facilities that we get 70-30 on. So 30%, right, goes to Cielo in that case. So I took the revenues from 4 facilities of 50%, and then 4 facilities of 30%, and then that's 175 million around. Again, now these are, again, projections, and not exact, right? We're just looking for kind of a base number here, and this is also my base case scenario here. Nothing too bullish and nothing too bearish, and we're gonna see why that is soon enough here. So anyways, yeah, that's that. And now in 2025, I took 10 facilities. I took 8 facilities fully paid off, aka a 50% revenues go to Cielo there, and then 2 facilities again I took as another JV deal, and that was 30% revenues for Cielo. Now you'll note here that equals around, let's say, 300 million. It's actually a little bit less, but I added a little bit to that because, again, 7% management fee. And then, of course, they have that 30% markup on the catalyst, which I'm really not accounting for at all in this DCF. I am a little bit in the revenues here in 2025 projections, but mostly not, right? So again, so we get around $300 million. Now this is also what I want to show you guys here, right? And it says here, or what I wrote, right, is if they produce as much as they say, then that would be 32,000 liters per hour for 8 facilities, right? Which is about 4,000 liters per hour per facility. And that's where they say they will be headed within the next year or 2 years here, right? So we took 32,000 and then multiplied by 24 hours in a day, by 30 days in a month, by 12 months, right? And so that gets us about 276 million liters per year produced here of diesel, of fuel, and multiplied by 167 cost per liter per fuel of Cielo's diesel, which gets us about $461 million here, right? And now note that is from 8 facilities. What I have here is much lower than that because of those projections of those 50 million, which they or 55 million, sorry, which they project to make per facility within the near future here, right? So again, 300 million compared to 461 million, you can see kind of how this is my base case, more not very bullish at all here, really, right? And I am bullish. So this kind of price target is lower than where I expect it to be sort of in moving forward here. But I wanted to keep it kind of conservative as well for you guys here, right? Nothing too bullish. So that's kind of the revenues there. Now, the EBITDA margin here, I basically left sort of similar to what we would get in an average DCF. You know, I didn't kind of increase the margin percent very high. And we can see obviously we're negative in these first 2 years as well because of negative cash flows, obviously, right? So that's that. Again, same kind of thing for EBIT here. And then non-cash expenses. Again, I left it very kind of normal base case-esque there. Now, as for cash and accounts receivable and all this, I kind of just took their values right now and left them essentially untouched. And you know, we can see cash, it just stays the same throughout every period, 383,000. Accounts receivable, again, just goes up by, we can see right here, 10%, 11%, 12%, 13%, right? And the rest kind of go up again by very standard numbers, let's say here, right? So again, nothing too extreme here. Tax rate, I took 20%. Again, first 2 years we are negative, so we get 0% tax on that, and then 20% thereafter. Long-term growth rate, I took 4% because, again, that's pretty general. I could see it being higher, actually, at maybe 5-6% here, especially because this is a new company, right? And once they get started, we're going to see some big growth here moving forward past 2025. Still, I thought I'd just leave it at a sort of a base here. Now you'll note we have a WACC of 0.12 here. I did some changes in the numbers and it's 0.15 down here. But again, this will be the number here at 0.12, right? And then we get an equity value or equity value per share here is what we're looking at $2, right? And that is where I see the price of Cielo where it should be right now based on my DCF model here. So that is at over 100% upside from what the current price is. Now, you know, of course, maybe I am a little bullish, but this is still my base case here, and we still get a $2 per share mark right now is where we should see that price. So, you know, that's part of the reason why I'm so bullish. I do think we're undervalued here as a stock, being less than $1 right now. So keep that in mind, right? When you're looking at it, you know, I do expect us to kind of see that $2 per share mark within the next few months here. you know, but we're not seeing that yet, and it does surprise me. Maybe again my numbers are a little bit too bullish here, but this is what I have, and this is what I'm sticking with right now, you know. And please let me know in the comments what you guys think about this too, right? I would love to hear what you guys kind of have as a price target, and not only that, but also kind of what you think about my kind of rationale here of their revenues, of their kind of expenses, etc. here. The other thing I did want to note, actually, which I kind of forgot to mention, is their debt, which I've left at, you know, 6 million again, because their JV agreements here are going to basically prevent them from needing a debt or capex, right? And that's why capex is so low here too, because, you know, we have these JV partners, and since I didn't account for any of their own facilities, right, that's the other thing that's important to mention here, is these are all JV agreements, but they have said, Don Allen has said that he wants to build his own facilities on top of these JV agreements, right? And again, that's going to push this revenue much higher, because we're also only accounting for 10 facilities here by 2025. And this is going to be more like 15 facilities, more like 18 facilities, maybe even, or higher, right? Depending on how many Cielo builds, depending on how many other JV agreements Cielo gets here or wants to get, right? Because they've said they don't want to do anymore. They want to just start building their own. Either way, this number should be higher. But again, since I didn't account for any more debt and I didn't account for any more capex, we've just left it there. So again, $2 per share on this DCF here. So near term price, right? Now, the other thing I wanted to show you guys is this right here. And I just did this quickly here, but what we're basically looking here at is projections for 2025. Where do we see the price in 2025, right? Now, what I did is I took 298 million. This is my projections from the DCF, right, with 10 facilities, 298 million. And again, what I wrote here is low, because this is a low estimate, because as we saw from before, we should have by 2025 more than 10 facilities. We should have more than 55 million revenue per facility, and even at sort of my projections with 10 facilities, if we look at kind of that 32,000 liters per hour produced, we get that 461 million. So again, we're low on revenues here, and we're high on expenses. What I did here is I took 70% of revenues as expenses. So basically we have 30% of revenue left for our profit, which is 89 million there. Now, why is this high? Well, because again, we're not accounting for their markup here on their catalyst, and also their feedstock, right, comes straight from the garbage dump. So they're basically paying next to nothing for what they need to produce this diesel, right? So it's essentially just operating expenses and a few other expenses there. So again, high expenses, right? Still, base case scenario here. Now, profit, we have about 89 million. That's similar to the DCF there. Net income after tax, right, with a tax rate of 25% is about 67 million. That's a high tax rate too, in my opinion, for this company in Canada. So anyways, 25% shares out 313 million. EPS, then we get 0.21. Price right now, again, we have $1, right? So the forward PE we get from that is 4.6. Now, I've given Cielo here a pretty high PE at 80, right? 80 times. And the reason for that is because I think we're going to experience quite a lot of growth in Cielo in kind of this move to clean energy, to green tech here. But again, I think it's not too unrealistic there, which gives us a price in 2025 of about $17 a share at a present value of $1 and a future value of $17. That gets us a rate of return of about 76% per year. And that is discounted to the present value, obviously, and a market cap of about $5 billion. And so again, I don't think this is unrealistic, and I don't think this is over bullish either. And again, my bull case has us at much higher than the $17 a share, right? I have this at about let's say 500 million, then all of a sudden we get to a share price of $28. And I think this is actually a much more realistic number for their revenues and their total expenses here as well. I think 70% of revenues is semi-realistic. It could be actually quite a little bit lower than that though as well. So we can see $28 a share now, just by increasing revenue by 200 million there, and again, not unrealistic for this company with where they're headed, with what I showed you guys with that 461 million, if they can produce that 32,000 LPH, and that is not even really still a bull case in my opinion. So that just shows you where I see this company going, and kind of, this is supposed to be 70 as well, 0.7, right? Not 0.75, sorry. And it just kind of shows you guys, right, where I think this stock might be going, and why I'm just so bullish on Cielo. And that's going to do it for the video today, guys. I just wanted to share that with you. Let me know what you guys think in the comments. I'd love to hear if you guys kind of think in a similar way here, or if you think I'm completely mistaken. And other than that, I hope you guys have a fantastic day. And again, as you know, I am filming a few less videos these days, but I will have a video out for you guys on Friday as well. So enjoy the rest of the day, enjoy the rest of the week, enjoy the green, and I'll see you guys on Friday.